All right, stocks are rising today after a wild week that put the Dow above 50,000 and shaved a point off the NASDAQ. But now investors are looking ahead to a big week for economic data. New jobs numbers on Wednesday and January's inflation report on Friday will give a fresh read on how the economy is faring in the new year. President Trump says America is 3 years ahead of schedule.
The stock market, as you know, broke a number that they thought was going to be impossible to break. Certainly during my first year, they said if you could do it in your fourth year, by the fourth year, we broke 50,000 on the Dow. Most people thought that was not possible to do so quickly. We did it in the first year. So we're about 3 years ahead of schedule.
The president going even further on True Social, saying the Dow will hit 100,000 by the end of his term. Kenny Polcari, you must love the sound
I am
of that.
all in if that's the case.
You buying into that?
I put it in my note this morning, and I was there in 1983 when the Dow was 792.
Oh.
Yesterday, Friday, it was 50,000. So it's a 6,200% rise, but it took 40 years to get there. So the fact that we're going to go from 50 to 103, I love the idea. I just don't think it's happening.
Well, he is a bit of a salesman, Taylor.
Just a little bit.
He likes to kind of push the boundaries a little bit. But kind of what he's saying, though, what do you think about the claim that basically his agenda is happening faster than even he thought, but faster than what the experts think? Is that overblown, or do you think there's some validity to that?
No. I mean, look, I think that the economy, the proof is in the numbers. We've talked about Atlanta Fed GDP still at a very high for a $30 trillion economy, 4.2%. We've talked about how, and Kenny knows this better than I do, but revenue up 9% year over year. I think revenue would be good if we were tracking GDP growth. So the fact that revenue is double GDP is shocking. I think the fact that we can get earnings growth already over 15% year over year, that is the fundamentals, Brian, of these companies showing that they are churning along. And what I like, and I know last hour, Jackie and I traded some jabs because I usually prefer the S&P 500. She prefers the Dow. But what is interesting about the Dow is it's Caterpillar, it's Goldman, it's 3M, it's McDonald's, it's, classic industrial American companies. And look, big tech is great because it's also powering the AI revolution, don't get me wrong. But it is really nice to see industrial America shine bright as well and come up along with it.
Now, Jackie, I'm going to give you in just a second, give you a chance to bring your Dow magic to this conversation. I do, Dagan, want to ask you, though, about the data coming this week. You've got delayed jobs report. You've got inflation numbers. I'm reading that the inflation report could come in a little hotter than maybe you'd expect. That's been a January phenomenon the last several years. I don't know. As you're eyeing these numbers, what are you looking for?
If it's a little hotter, that's reason why the Federal Reserve held rates where it did. Most recently, I'm just making excuses for the Fed, but I think right now the markets are watching what's coming out of anything out of tech. What has happened in a whole host of different asset classes recently, like when you have silver lose almost a third of its value in one day, which was at the end of January, in metals, in crypto, Bitcoin, even the software stocks. That is, you can look at it in two ways. I'll do glass half full, that it's healthy that people see the risk in these asset classes, and it does shake leverage out of the system, which is good. But it could also mean the beginning of the end for all of these asset bubbles. One thing about tech, which is concerning, even beyond the trials that are going on, and it's something I've brought up over and over again about the AI revolution, is that has the apple cart of the high margin tech monopolies been overturned by those very tech monopolies as they spend gargantuan amounts of money? And I'm pointing to, say, Microsoft and Microsoft's downturn recently. They're spending massive amounts of money, even borrowing money to do it. Taylor can talk later on about the Google bond offering, wildly oversubscribed. But they're spending massive amounts of money to destroy their own high margin, high profit monopolies, and how much of that is being factored into the downdraft in these stocks.
Jackie, I want to go back to your Dow for a second, some Dow love, if you will, because we're going to talk, this is a tease, later in this, maybe it's the next block, but we're going to talk about, later in this hour, we're going to talk about how people are feeling about the economy, their own personal prospects, and sometimes the tech story has felt detached from what people are living through and feeling. To me, in a small way, maybe the Dow tells a better story of the prospects for people on Main Street, because it's not all tech high flyers.
Yeah.
It relates more to the kind of economy that more people are participating in with their jobs. What do you think?
I think so, and I think that's why I like looking at the Dow, because I do remember when there was life before the tech industry, which is what you talk about. And my parents would say, "What'd the Dow do today?" And so I still look at it because I'm thinking about the fundamentals. While we have tech offshoots that do really well and are fueling growth in this country, you don't just want it to be, to a certain degree, at least under Joe Biden, when we saw Mag 7 moving, just having it be that and have that be the only thing. And so it's nice to see breadth within the movement, right? So that's the first thing that I would say about that. The second thing about the wealth effect and the consumer and some of how people are feeling, a lot of that wealth effect was in Bitcoin and it was in Mag 7 stocks and some of these credit companies that Dagan talks about that have also gotten hammered, and the software companies as well. And so if this ends up being sort of a prolonged pullback, I think that there'll be some lag time. But, you know, if your Bitcoin got cut in half and it doesn't go back up, on paper, you are worth a heck of a lot less than you were before. And I think that was fueling a lot of these like expensive trips that people were taking and dinners out all the time. And you go out and you're saying, where are people getting all of this money from? And those people are disconnected from the real people who still are complaining about affordability, meat prices, coffee prices, housing prices, rent prices, just basic stuff.
Do you get nervous about the systemic effects of the Bitcoin pullback, Kenny? Or maybe more generally, to Dagan's point about just the overall asset, if you want to call it an asset bubble pullback, and the effect that might have on consumer behavior, the effect it might have in other parts of the market as you're dealing with leverage and margin and all these things?
I think you have to recognize the role that it plays, right? Because a lot of that stuff was levered. And what we saw last week was we saw a quick unwind of that leverage, right? When they started to break down and then margin calls were, people started getting margin calls and then they were breaking key trend line supports and you get another wave of selling and it just caused anxiousness in the market. So I think you have to recognize the role that plays. But that being said, I don't think that, Joe Q public across America is really sitting there saying, okay, I feel poorer today because of my Bitcoin, because I'm not sure how many people in America are really playing the Bitcoin
I don't think it's
right?
a Joe Q public story necessarily. Although there are quite a few people who own it and have felt good about the fact that it ran up to 120.
Correct. They felt good about it. Look, I felt good about it when it was trading at 120, right? I mean, my cost is about $58,000, so I'm still in the money. Not as much as I was, though. But it's not such a big part of my portfolio that it's going to make or break me, right? If it goes to zero.
Well, it shouldn't be, right?
Correct.
So that's smart.
Correct. And so if it's a bigger part of your portfolio, then you're going to have a whole different feeling, right? If you keep it to an appropriate level, then maybe not so much.
Brian, the only other flip side of this, and I don't want to step on Dagan's toes, but when we talk about some of these companies like Blue Owl, for example, there was a story out today where, and this is similar also when we talk about Larry Ellison over at Oracle, and we'll talk about Oracle later, how much personal leverage have they used against their shares? So if you have Blue Owl that's down, 16% this year, we don't know how much those co-CEOs have also leveraged against personal shares in that. So that's not a systemic issue, but that is something that could trigger something when you get big declines such as these to some of these individual shares. Now,
it is systemic.
Okay.
Across. And this is a big question. I want you to keep talking. But it is systemic going back to Silicon Valley Bank. How much money has been loaned against all of these inflated assets?
Correct.
Tech stocks, Bitcoin. And I say it like that to the people who were saying nasty things to me on social media. So nobody really knows. I wasn't just talking about Blue Owl. Go ahead. No, keep talking.
No, that
keep
was
talking.
it.